welcome to the Aggressive Realty Show. I'm Ken Temborski. I have FNCB Bank, me and Patti, I did it, didn't I, Patti?
Dastalfo.
Dastalfo, and Mike Barrouk. Mike is in charge of the commercial lending, and Patti is in charge of the residential lending. We're here today to discuss a little bit more about banking, about buying a home and doing a little bit more with your money, saving money, making money, doing a little bit of each. Welcome today. Thank you, Patti.
Thank you.
Thanks for having us.
Thank you, Mike. Let's start off with Patti, ladies first.
Okay.
Patti, tell us a little bit about yourself.
Okay. I've been in the mortgage industry for over 15 years. Originally from the suburban Philadelphia area, but I moved to the Scranton area a few years ago, and I'm with FNCB Bank now. So I bring a lot of experience, a lot of previous experience in mortgage banking.
Types of loans, example?
Pretty much any kind of residential loan that's available these days. So, you know, any kind of purchase or refinance money, whether it be a first mortgage or a second mortgage product, which they typically call an equity product. We can accommodate pretty much all of those. So, yeah.
Cool. Mike?
Well, I've been in banking for about 16 years. I grew up in the Pittsburgh area and moved out to Northeast Pennsylvania back in 1989. I currently live in the back mountain with my wife and 3 kids, and I've been with FNCB in the commercial banking group for almost 2 years now.
And primarily, beside in the commercial market, you basically concentrate strictly in the commercial.
I do. We work with business owners. We provide lines of credit, commercial real estate loans, C&I loans for businesses. So you know, we have the full gamut of products for our commercial clients.
One of the things in the Hazleton area that you'll find is we have to go out and there's a commercial lender and there's residential. Residential does most of the homes, being your FHA, your conventional, VA, many types of different loans. And we'll discuss them a little bit today, talking on the difference in what you need to put down, what you don't need to put down, what's included in your mortgage, what's not included in your mortgage. We're going to go into a little bit of the process of what takes place from the start to the finish. One of the things that Aggressive Realty does is we do it complete. We start with you and we finish with you. We will help you. We can only suggest where to go. We cannot tell anybody it's against our banking rules or our real estate rules. Nobody could tell you where to go. We can only suggest. We suggest people because of the times it works a little better. We know who will work with you, who will be with you from the start to the finish. In the commercial side, it's the same way. When you're looking to buy a business, you go into the business. They'll take a look at the books. They'll take a look at the numbers. If you're interested in that business, they kind of work with you. They're kind of like side by side with you. They got your back. You go into it. We'll get into today discussing how you get into what you need to put down. It's very different than residential. A lot of people think it's pretty much the same. It's a little different. Mike, some of the stuff that you do need on a residential side to buy, is it 2 years or 3 years of tax returns?
Well, on the business side, Ken, we're going to look at 3 years of personal tax returns on the individuals, as well as hopefully obtain 2 to 3 years on the business as well. When we're looking at commercial real estate loans, the first thing that we're going to want to receive from the borrower is a copy of the sales agreement. And then we'll start our due diligence from there and getting a full understanding of what the property is. Is it a single tenant property, multi-tenant, mixed use, and then look at the cash flow of that property, and work with the borrower to make a decision. And then, of course, as we go down that path, require a commercial appraisal and understand the value of that property, and then work with the customer on the equity part or portion of the loan as well.
Patti, maybe we get into a little bit on the housing end of it, because again, we do a tremendous amount in housing. Aggressive Realty is out there with 14 agents consistently out there. You can call me anytime. It's 570-788-8500. We will be there to help you. Any questions, anything at all. Maybe you just have a question today. Maybe you just want to talk about it. Maybe before you do an improvement, you want to talk to me. But Patty, how would you start after you, and Mike is so right, once the contract is written up and the office accepted, what do you do then?
Okay, well, we're assuming that I've already talked to our customer, right? And we've got a pre-qualify, we are pre-approved. Actually, our customer or borrower, that we refer to them as our borrower, typically that borrower will already have a list of documents that I'm going to need to see. So a couple of those will be when we first pre-qualify them. The rest of them will be the remaining list. The typical things that we look for, I mean, I can certainly tell you that. We're looking for like your last 2 pay stubs from your job. We're looking for the last 2 years W-2s from your job. Sometimes I'll need tax returns. That depends on how you're paid, and we'll talk about that up front, so you'll know that ahead of time. I'm gonna ask you for 2 months of your bank statements, and that's just to show where your funds for closing are going to come from. And we do need complete bank statements for those. And after that, I'll just ask for contact information for your homeowner's insurance, and I just need your agent's telephone number and name, and which title company you select, whether it's one that we typically work with or one of your own choosing. That's completely up to the borrower. And we can work with any of them as long as I have contact information, and we'll take it from there.
Good. What does it normally take when you talk on credit scores? Credit scores are very important. There's multiple tiers in credit. But am I right to say it is a 640 credit score in order to buy a home today?
Typically. There are exceptions to this, however, and I would never encourage or discourage someone who feels that their credit score may be a little below a 640. Because
we would always work with them to
we
try to build them
would,
back.
and we have some, you know, at FNCB we have some very creative programs. Now, can I place 100% of people? No, I can't. But I'm going to tell you that we have some very creative programs for placing customers who may have had challenges in the past and their scoring model isn't as high as others might be. So it's just something that we would have to explore together. That's why getting pre-qualified in the beginning
And getting to know them.
is, and absolutely, and actually getting on the phone with me, discussing it with me, and getting a hard pre-qualification is really key to going hand in hand with your realtor in the process of finding your home.
Cool. Mike, we'll come back with you and we'll start the next segment. This is Aggressive Realty. I'm Ken Temborski. This is Patty and Mike. We're here from FNCB Bank today to discuss what it takes to buy a home. We'll be back with you shortly. Welcome back to the Aggressive Realty Show. I'm Ken Temborski. I'm here today with Patty and Mike from FNCB Bank. FNCB Bank is a large bank with approximately 17 locations right now and growing. One of the things that we're going to get into today, we're going to talk a lot about the residential side and we're going to talk about the commercial side. We're going to talk about what it takes to do this. Aggressive Realty has 15 realtors. We're there from every day. Different persons there every day. You can call. We're there till Saturdays till 12 o'clock. Give a call. Anything that you see, it could be XYZ company. It doesn't have to be our listings, our signs. As you see our signs that are red and white signs with the bulldog on them, that's Aggressive Realty. But it could be anybody else's sign. You can call. We all share listings. So if you see something you like to see, give us a call at 788-8500. We're there to show you the property. We're there to do what it takes. We'll bring the right people in to help you. We'll give you the suggestions you need from the start to the finish. Mike, let me ask you, in a commercial loan today, how long does that process take?
Well, Ken, it really depends on the size and the scope of the project. The 3 things that'll dictate or predicate how long it's going to take primarily are, number 1, how quickly the borrower can provide the bank with all the financial information that we require. 2, whether or not an appraisal will be needed to consummate the deal. Commercial appraisals generally take somewhere between 3 and 4 weeks. And then 3, depending on the property that the borrower is looking to purchase, whether or not a phase 1 environmental would be required or not. Phase 1 environmentals generally take somewhere between 30 and 45 days. And as long as there's no further issues from the phase 1.
Can you, not to interrupt you, but can you explain to the public, what are you looking at? Tell them the difference between a phase 1 and a phase 2. Or if you'd like, let me go into it and then you tell me if I'm right or wrong.
Sure.
A phase 1 is basically is surface samples.
Mm-hmm.
Basically, you look at the samples and example, dry cleaners, example, gas stations, example, any past type of chemical plant, oil changes, that type of place, correct?
Exactly, yep.
Phase 2 is where they core drill. They'll core drill samples out and take samples of soil and take them and test them. Is there something else with the phase 2?
The phase 1, if there are issues, they'll give you a list of what the issues are and the remedies that they would recommend to satisfy
Soil treatments?
the soil treatments. And then the phase 2 would come in and they'd work at satisfying that. And again, like you said, doing some drilling if need be.
One of the things that is so important, aggressive realty, is finding the right realtor, finding the right bank, finding the right closing company, finding the people that will walk with you and point out this stuff. It's very easy to sell something, but nobody wants you to get caught with something that you're not supposed to, nor does the bank, nor does the real estate company. It's very important to find somebody that is very qualified to take you out, talk about this stuff, give you some things that you might be seeing in the future, because we all know that surprises aren't fun in the real estate business.
Exactly.
So we're here to protect you. We're here to help you. We're here to direct you and suggest to you in different areas what to look at. Just like I just said, nobody would realize a dry cleaning business. It could have been a dry cleaning business from 30 years ago. It still has an environmental issue that we got to worry about. Correct?
Yeah, you don't want to get caught off guard with unexpected expenses and delays when you are looking to make an acquisition. So, have that conversation with your whether residential advisor or your commercial lender, so that you're aware of the steps at the onset.
And time is money. The longer you're delayed, the less you're in that business. I just had a case where we just sold a business. We sold the business, we sold the books, we sold the debt, we sold the income, and we sold the buildings. And then we set up an auction for an auctioneer to come in to buy all the inventory or actually have an auction on site. So besides selling houses, besides selling businesses, besides selling property, we do everything. Don't hesitate to call me. Ask me the question. Give me some ideas. We'll get a look at your books. We'll sign a confidentiality agreement. We have our people sign confidentiality agreements. We'll take a look and we'll see what the worth is. We'll have an accountant take a look at stuff. Patti, I'm sorry I talk so much. I apologize. Tell me a little bit more on your side. Tell me how long your process takes, and please start with, very important to be pre-qualified.
Okay. So a pre-qualification can take place over the telephone. It's a conversation between myself and you as a borrower. And I'm going to ask you a bunch of questions, of course, and they're really relevant, so that I'm very thorough. I'm going to make sure I ask you probably more than I need to know up front. That pre-qualification, you would be able to have that letter most likely within 24 hours. And that can be delivered to you in whichever manner you choose. You can have that given to you in person. You can have it delivered to you by email, which a lot of people like now because it's convenient.
Faxing's become dinosaurs now all of a sudden.
I know. I mean, I can still fax, or we can mail it. So it's up to you, whatever's most comfortable to our borrower and what makes them feel most
Now, one of the things when you get a pre-approval and you say to them they're qualified for $200,000, I, as Aggressive Realty, say you never want to spend the top of your point. Yes, it's always nice in the banking point, but relatively a house should work for you. You shouldn't have to work for a house.
Yes.
So don't think that you can go out and spend that top dollar all the time. Go back. Don't forget, there's going to be a day that whether you have children, whether you have a sickness, whether there's a problem, whether your spouse has an issue, you got to make sure that you can make that payment. You got to make sure that you can make that loan payment. That's so important to keep your credit up. Late, 30, 60, 90s, show on your credit report, it takes points away, correct?
Yeah, it really does. And typically that puts you in kind of an uncomfortable position. So it's kind of my job as well, helping them to understand what's affordable and what isn't within their budgetary restrictions. There are guidelines that we follow that actually allow them to have a cushion and live comfortably in what we're going to pre-qualify you for. So you can rest assured there's kind of fail-safes for that these days. We want to make sure that we have a customer in a home that they're really comfortable with.
That's important. As a realtor, we want you to come back. We want you to step up and grow again. We want you to go to the next bigger home when you're ready and your family gets bigger. That's why these people are here today, to help you with that. It takes nothing. Their name and number is going to come up on the TV. You'll see their name and numbers. You can call them directly. You can call me, and I'll refer. I'll give them your number to call you. Guess what? We're here to make it work. I am Ken Temborski from Aggressive Realty. Again, 788-8500 with any of your questions. We'll be back shortly. Thank you. Welcome back to the Aggressive Realty Show. I'm Ken Temborski. Again, I'm here with Mike and Patti. They're both from FNCB Bank, which FNCB Bank is also located right up the street on the left-hand side next to Gottstein's hardware store. FNCB Bank is a neighborhood bank that's been here for a while. Grew here, I can't remember exactly when it came, but with 17 locations, they're here to help, they're here to make it work, and they're here to help the community grow. From Dunmore down to Allentown. So they have a lot of branches. I'm going to jump into, Patti, I'm going to jump to Mike on this one. Mike, tell me what the normal equity requirements are on a commercial or a real estate deal.
Okay. The bank, 99% of the time, will do an 80-20 split with the borrower. Which means we'll finance 80% of the borrowed amount, and the borrower will be responsible for coming up with the other 20.
So in other words, if it's a $200,000 business and building, you'll come up with they come up with $40,000.
Correct.
And if they have the credit and they fall within the guidelines of everything that's needed, you would lend the 80%.
The $160,000 in your example, yes. And the borrower has a couple different ways to come up with that 20%, whether it's equity in their home, whether it's equity in possibly another commercial property that they own.
So in other words, if they own another property that's free and clear, you'd consider taking that?
They could pull cash from that property. At the end of the day, the preference of the bank is for a 20% cash injection on the deal, or possibly from an investment account or a brokerage account that they may have individually. So there's a couple different ways to skin the cat here to help get that deal to the finish line. And
when we're talking, we can go from anywhere from $10,000 on up to millions of dollars.
Correct. Yeah, there are really no parameters on the low side or the high side.
That's why it's so important to keep your credit up. That's why it's so important to follow through. Believe me, on utility bills, people don't realize, but even on your utility bills and your homes, utility bills are 30, 60, 90. You get strikes against them. The same thing, I always say, and you see these commercials on TVs on these finance companies that offer this, offer that. Well, one of the things that they do is they put your name and your social security number out 10 times. They go out and they put it out for 10 people. You don't understand, but after 3 times your VICA score, which is your credit score, is hit, you lose points. So you got to be careful and go with somebody qualified in the beginning. Don't keep hitting your credit score. People tell me, oh, I did this, I did that. Even an inquiry on getting a credit card is an inquiry. When you have more than so many inquiries in a certain period of time, you lose points. So it's very important to plan buying a house, plan buying a business. Patti, Mike, I'm sorry, I'm going to jump to Patti because our time is flying today. Tell me the type of programs that your bank and you offer.
Okay, so we offer several programs, whether you have a lot of money saved for down payment or not. We have a typical conventional program. Typically that's 20% down, so you're going to put 20% of the value of that house down. But we also have programs for people that don't have a lot of savings right now. And we have an FHA, a VA, and an USDA also availability.
USDA is more of a rural, and it has to be in approved areas,
Correct.
which Sugarloaf, Cunningham, certain parts of like Beaver Meadows, towards the Bloomsburg area, are in that range. USDA is nice because you can get into their house with nothing.
Pretty much nothing. There's still borrower requirements always, and I'm going to say typically, like let's say it's a $100,000 house that the borrower's looking at. In a 3% program, or they want to see 3% contributed to closing costs, you're going to need about $3,000 of your own money.
Or if they do seller's assist.
You still need to have borrower contribution, however, but seller assist will take up the rest of that closing cost, so it makes it an easy process for the borrower. Seller assist, I would be able to explain to you. Please do call me. Don't feel timid about it. I can explain to you how it works.
One of the things that I run into a lot of times is you have a young couple, and a young couple coming out doesn't have a lot of money stored up yet.
Yeah.
One of the things is called a gift letter. The gift letter covers, it has to be a blood relative. They could lend you the money for that $3,000 or the down payment. They can lend you the money as long as it's a certified family member who will sign a gift letter. Correct?
Yes, and we can source it. So just keep in mind, I'm going to ask you for that. I know that's a topic for another day, but we will want to source it, the donor's ability to give it, meaning a bank statement. Then we're going to want to see the check going to you and the check going into your account.
Right.
We're building a roadmap.
So basically, your parents, your relatives, your sisters, your brothers could help you in that journey. There's many ways. That's why it's so important. Even if you're just thinking about it for next year, call me. Call my office. My people are so qualified. They can help you. We also have bilingual. We have a very great guy. His name is Orlando. If you're bilingual and you feel, you call him. Leave a message for him. Whatever makes you comfortable is what we're supposed to do. And that's what my goal is to do. One more thing. Let's get into FHA.
Okay.
FHA is a requirement of what down?
It's now 3.5%.
Okay.
It's 3.5%. It used to be 3. We have a mirroring program that's conforming at 97 loan to value, which is a 3% down.
Right, which the 97 is the LTV, loan to value. They'll lend you, if it's a $100,000 house, the bank will lend you up to $97,000 for that house. You got to come up with the $3,000, whether it be in a gift letter, and your closing costs, being your seller's assist.
Yeah.
In a conventional loan, why you look at doing a conventional loan a lot of times is because with 20% down, you don't need PMI. PMI is private mortgage insurance. At that point, it's substantial. It adds on to your payment per month. If you could have the 20% down, you don't have to have PMI, which is great.
We also do have a product too, just to keep you out of PMI if you're putting less money down. Like let's say you want to put 10% down on your property. We have a program, what we call it a piggyback or a simultaneous close, where we do first mortgage at 80% loan to value and the second mortgage for that other 10%, and that avoids actually having to pay the private mortgage insurance. So it's a creative way around.
Almost like a new construction loan.
Similar.
Wow. You know, as long as I'm in this business, I could still learn something. Thank you for that.
Thank you, Ken.
Mike, you want to finish it up? We have 25 seconds on the commercial side.
Sure. Any business customers out there that have any questions, have any needs, whether they be big or small, please don't hesitate to pick up the phone and give me a call directly. There are no stupid questions out there, so please feel free to reach out anytime, and either myself or one of my colleagues will be happy to get back to you with some answers.
Patti, I want to thank you very much, and I'm sure we'll be doing this again. Mike, thank
you
you
for your
very
time.
much. And I'm Ken Temborski, Aggressive Realty. We'll talk to you again next month.